Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the headlines. Sri Lanka attracts a growing investor confidence, says Standard Chartered Bank. Stalled Japanese and Chinese projects to restart. And Adani wind power deal at a standstill over tariffs. In our top story this week, according to Standard Chartered Bank, Sri Lanka is gaining positive investor sentiment, particularly from international portfolio investors, as confidence in the country's macroeconomic stability strengthens. Speaking at the bank's annual global research briefing in Colombo, the global head of fixed income research, Kaushik Rudra, highlighted that debt market investors are increasing their exposure to Sri Lankan assets, signaling renewed trust in the economy's recovery. Rudra added that due to the country's strategic position, Sri Lanka is well placed to benefit from shifting global trade patterns, particularly in South-South trade flows between China, ASEAN and the Middle East. SEB economist for South Asia, Saurav Anand, projected economic growth of 3.5% over the next 2 years, but reserves are expected to reach $7 billion by end of year, supported by IMF funding, remittances and a rebound in tourism. However, the Global Investment Bank expressed concerns over tax revenue collections that inflation could rise by 6% by the fourth quarter of 2025. Foreign exchange reserve section and debt repayments, as well as the outlook for FDIs, remain a long-term prospect, thus underscoring the critical role of policy consistency to attract investments. Sri Lanka is reviving 11 major Japanese government projects and 76 Chinese-funded projects that have previously been stalled. President Anukumar Desanayake made this announcement at the 26th anniversary of the Chamber of Young Lankan Entrepreneurs, highlighting the government's efforts to inject new life into the economy. According to the President's Media Division, these initiatives align with the administration's commitment to reversing economic stagnation. Desanayake emphasized that the 2025 budget is designed to promote economic mobility and development while avoiding major economic shocks. Adani Green Energy has informed Sri Lanka's Ministry of Energy that it is willing to proceed with the 484-megawatt wind renewable energy generation project under previously approved terms, provided the government finds them suitable. However, Cabinet spokesman Nalinda Jayatissa reaffirmed that the government's position remains unchanged on lowering tariffs to 8.26 US cents per kilowatt hour to 6 cents before resuming discussions. Adani had planned a $442 million investment in wind farms at Mana and Punareen, including a 220 kilowatt and 400 kilowatt transmission networks. The company stated that after 2 years of negotiations, it had been awaiting formal confirmation on tariffs, but due to the lack of an official response, decided to withdraw. In this week's tourism update, Arrivals continued its strong momentum, welcoming over 70,000 visitors in the first 9 days of March. Year-to-date arrivals now stands at over 560,000, 17% higher from an year-on-year earlier. Daily arrivals averaged fell to 7,828 from the 8,579 in February as the peak season nears an end. India, Russia and Germany remains top source markets, with India leading at 10,523 visitors. Sri Lanka aims for 3 million visitors in 2025, targeting $5 billion in revenue. Sri Lanka's tea exports reached 19.37 million kilograms in January, up a modest 0.61 million kilograms from the previous year. Growth was driven by tea packets, tea bags and instant tea, while bulk and green tea exports declined. The free on-board price average of 1,722.78 rupees per kilogram, slightly lower than last year, though in the US dollar terms it rose by $0.38. Iraq led as a top importer with 3 million kilograms, a 21% increase, while Russia followed with 1.7 million kilograms, an 11% decline. The all share price index at the Colombo Stock Exchange remained volatile this week. Turnover continued to be subdued, significantly lower than the 8 billion rupees recorded in early 2025. Meanwhile, LOC Holdings plc has been included in the FTSE Frontier 50 index, effective from 24th of March, highlighting its strong financial performance, market liquidity and growing investor confidence in frontier markets. John Keells Holdings plc is the only other Sri Lankan entity to be included in this index. At the Treasury bill auction held on Wednesday, yields on 91-day maturities fell for the 12th week. Bids amounting to 329 billion rupees were received, of which 165 billion were accepted. The Sri Lankan rupee was steady against the US dollar this week, with the central bank's indicative mid-spot rate ranging around 295 rupees. And with that, we wind up for this week. For the latest on economic and business developments in Sri Lanka, do subscribe to our YouTube channel below. We'll be back next week with more insights. Until then, thank you for watching. Stay safe.